As organizations seek to drive profitability by responding to market challenges more quickly, they are increasingly looking at technology. In the finance space, this generally leads to an upgrade of their outdated or overly complex ERP systems. An ERP implementation, as we all know, requires significant support from strategy through to execution to address the related financial compliance and other challenges. With us today, we have Victoria from our tax department, who's going to take us through a little bit more around how we could implement tax function into the ERP upgrades or ERP systems. Victoria, welcome and happy to have you with us.
Thank you, Jason.
Perhaps we could start by, why is it important to include tax when looking at an ERP system or upgrading an ERP system?
So I think there's many reasons, and the one that strikes me initially is tax is usually the single biggest line item expense on a company's income statement.
Yeah.
It can be anywhere between 20 and 30%, depending on the mix of profits of the whole organization's net profit before tax. So it's a really significant expense, and it needs a lot of care and diligence around it. Generally, what we find is tax is an afterthought, and most of our clients will be doing tax on an Excel spreadsheet outside of the system. And that's because mostly tax is not a pre-built or standard package within an ERP system. And this ends up in lots of manual work for tax teams, and the data that they prepare is oftentimes very late in the period of reporting. So tax is at the end. By the time the tax reports are all done, everybody's moved on, and actually, who cares, because that was last month, you know. Yeah. But I think what's important is the fact that this can actually be done in an ERP system, the way that technology is moving, and especially as everything moves more to the cloud. It's a great opportunity to think about what can I do in my ERP system with tax to get rid of a lot of that manual workaround and reconciliations and moving of data from your existing ERP system to an Excel spreadsheet to come up with an answer that you then plug back into your ERP system. It just makes so much more sense to have it within one system.
Yeah, so if I got to think back at it, direct tax, indirect tax, international tax, all of that, if it's incorporated into an ERP system, would definitely allow the tax teams to focus more of their time on better tax planning, I guess.
And that's exactly what we're trying to achieve here. We want to move tax teams away from being a more traditional compliance function where they're looking at historical data, to having the ERP system do the number crunching, if you want to call it that, for them, so that they're able to spend time on more value add tasks and become more of a strategic business partner to the CFO and the business themselves, rather than here's your data. Yeah. Here, it would rather be, if you did A, B, C, D, and E, here's an insightful report about decisions that you might make in the future and the impact the tax will have on those decisions.
Maybe just elaborate a little bit more for us around how can the ERP system actually help, some examples.
So examples could be in the direct tax space. If you configure the ERP system correctly up front, it is possible to automate the tax provisioning process. So that's your current and deferred tax calculations at a profit center level, so that you're able to see a tax charge for a geographic region, a legal entity, a business unit, however you'd like to see it, at in real time. So it's not waiting for weeks, perhaps after month end or after year end, to see what the position is. Or if you wanted to see, what am I going to pay SARS today, you can see that right away. From an indirect tax perspective, there is a lot more that's readily available in the ERP systems than for direct tax, probably because it's more standardized across jurisdictions globally. But even in that space, there is a lot of advancement happening around e-invoicing and real-time reporting to revenue authorities globally. So the ERP systems are progressing quite quickly to the ability to plug in directly to revenue authorities to enable real-time reporting and e-invoicing.
Okay, so lots of benefits from what I can hear.
Benefits. Yeah.
What does this really mean for companies?
So I think that
other than I hear the benefits, but perhaps just a bit more from a strategic perspective as well.
So I think what it does is it frees up the time that the tax team would normally be spending trying to get the data out of a system and preparing calculations, checking that they're accurate. It just frees up a lot of time. So there's a lot of efficiencies, and in that there's a lot of risk mitigation as well. So there's a much more reduced risk of human error, because that does happen, and the ability to process millions of transactions in a day, to analyze that for VAT purposes, or whether something's deductible for income tax or not, becomes a much more accurate process and enables risk mitigation quite a lot. So there's many benefits.
Yeah. So anyone who's been through an ERP implementation process or update process will know the pain that goes with that generally. Yeah. Perhaps from a tax perspective, what do you see the challenges around the tax implementation in an ERP system? So
that's an interesting question, and obviously something that I come across quite regularly. And I think the biggest challenge, the most significant challenge, is the fact that tax is, and I've said it right at the beginning, tax is an afterthought.
Yeah.
It's generally about finance and this ERP system, and how's it going to help us prepare our budgets and forecasts and our financial statements and reporting that we need for management accounts and SENS announcements and so on. And tax is generally at the end, oh gosh, we haven't thought about it. So I think the biggest challenge is making the awareness in the organization around tax needs to be right up front in the planning process of the ERP implementation or upgrade process. Because if you use the analogy of a puzzle, and you've got all the pieces of finance and all the pieces of data that you need to put together in your ERP system, and you've got that right, and now there's tax, it's very difficult to fit that last piece of the puzzle in when the puzzle's already done.
Yeah.
If you know what all the pieces are up front, you can lay them out, put them together, and you'll come up with your solution that you need. So for me, that's the biggest challenge is, and I like to say, tax must have a seat at the table. So bring that tax person or people into the planning and right through the project. I think that's the biggest stumbling block. And the other one that I come across is the fact that a lot of organizations aren't actually aware of what's possible in the ERP system. So because of that, it's not really thought about, it's not considered. Or tax is tax, and tax is done on an Excel spreadsheet because they don't know what is possible in the ERP system. So it's a matter of, I think, understanding what is possible, like ask the right questions with the vendors that you're dealing with, and making sure that you've got tax presence right throughout the project.
So I guess that's the key point, because very often these systems are implemented by IT people, by the finance team, and not necessarily a tax person. So we need the tax person up front there, like you said, a seat at the table. So we spoke a little bit about the benefits, right? And I'm just listening to more benefits as you speak.
Yeah.
I'm thinking about more and more benefits that sort of would come from this. If I think about, optimizing that ERP system to ensure that, you get all your outputs as required. Are there any other benefits you've seen come out from clients where you've done this?
Yeah, there's actually a lot of benefits. I think, we've spoken about the optimization, streamlining, time saving and efficiencies, and the risk mitigation. I think another one that stands out for me is that old saying, we've all heard it, that the world of today, everybody's expected to do more with less.
Yeah.
And I like to think of this as doing more with what you have, because you have the ERP system, so leverage it and do more with it. So it's about maximizing the ROI that you've made on that ERP and getting the maximum benefit out of it without actually needing to spend more money. So I think that's something that I've seen quite a lot.
Okay. And so how do you get started? I mean, we all want to do this. We all want the efficiencies. Yeah. We all want to make sure we get the tax right. Yeah. Where do we start, or how do you get started?
Again, it's a saying that I think is bandied around quite a lot, but it really, really rings true in this instance, is start with the end in mind. So if you know from a tax perspective what do you need to deliver to SARS in terms of VAT, withholding tax, income tax, dividends tax, any of the taxes, think about all of those reports that you need and go right down to the granular level of detail. Because often what we find in tax is the data that we need to report to SARS is not easily available in an ERP system, because by the time it's ready for financial reporting, it's already been aggregated to a point that's not relevant for tax. So if you know for these reports, I need this baby level of data, to call it that, when you set up your system, you need to bear in mind, I need those data points for all of these reports. So you're starting with, what do I need in the end to report to SARS? What do I need in the end to report to my stakeholders, whether they are external auditors or the JSE from a tax perspective, and work backwards from that back into what am I going to need out of that ERP? And then, so I suppose it's a bit like a gap analysis.
Yeah.
Where am I now? Where do I need to be? And plot out how I'm going to get there. And quite often it's very daunting, and it's very, very, very beneficial to break it down into bite-sized chunks. Start with different work streams and milestones that you can tick off as you go along. The other thing that I've learned is, even though you've got your roadmap and you think it's foolproof, things always change. Things always change. You have to be able to flex and adapt.
Yeah.
And maybe the way that you've thought you're going to develop something in an ERP isn't exactly the way that it turns out. So just flex it. So it's important not to be rigid. So I think where you start is start with the end in mind, work back, have your gap analysis, build a roadmap out.
You find that more ERP systems are starting to cater for these tax functions? Have they always catered and we haven't just used them?
It's a very
we talk about the IT side of things, yeah.
So historically, ERP systems have catered pretty well for VAT.
Yeah.
At a transactional level, to be able to report to SARS on your input VAT and your output VAT, that's pretty well catered for.
That's the basic one, right? So we all get it right.
Direct tax, not so much, but they are starting to. We are seeing more, let's say, customizable features. So often what we find is it's not set up for tax, but the ability is there. So you need to know, as the person implementing that ERP, what can this do? How do I need to configure it to get what I need? So it's almost like buying a box of Lego. The pieces are there. If you don't know how to put them together, if you don't know that the pieces are there, you're not going to be able to build the right solution. But I'm finding more and more that the right pieces of Lego, if you want to call it that, are in the box when you buy. So it's again back to do more with what you have and know what you have in the box.
And are tax professionals adapting to this or pushing more for being more digital? I mean, we all need to be digital fit in this age, right?
So I'm seeing more people are asking about it. It's definitely top of mind, but still not very well known. And what's interesting is that we're finding with this shift towards technology, the traditional tax teams the roles are changing away from a more of a compliance and tax technical expertise into needing to know how to use the technology. So there's now this term called tax technologists. I'm seeing a few of our larger clients have already got tax technologist roles. So it's definitely starting, but it's still very new.
So in conclusion, Victoria, we've spoken about a lot of items. Perhaps if you could, in a nutshell, summarize your top 3 important messages for tax transformation.
Okay. I think if I had to summarize, my top 3 would be have a seat at the table. Tax needs to have a seat at the table early on, right at the planning stages and throughout to the end of the project. And number 2 would be know what you need. So that back to that, start with the end in mind. What are you actually trying to achieve here? What do you need to deliver? Have a very clear end state in mind. It helps so much in your direction and setting your path. And the third thing is know what's in the box, if you want to call it that. So understand what you have and make the most of that. There is a lot that you can do. There are endless possibilities within ERPs nowadays. So really I encourage everybody to explore what they can get out of the ERP. And I just want to give one example of my favorite, actually, if I can say cherry on the top, was implementing a tax into an ERP system that we closed the reporting period for tax from a 21-day period to real-time view of tax right there and then at a profit center level. So, I mean, that was just, we freed up 21 days and 8 people's time. So the benefits are really there. It's tangible. It's real. We've done it.
So I think Victoria has given us all the helpful hints to get started on a tax transformation. I think it's critical that your tax function plays a role when implementing a new ERP function, as well as then making sure you have a hybrid set of skills when doing this. Thank you for listening to us, and we look forward to having you at our next session, which is around tax reporting and governance. Thank you.